Today's episode of Market Talk is brought to you in part by GrowMark FS. Keeping up on the latest in ag is a challenge to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And a good afternoon. Welcome into Market Talk for this Friday, September 3rd. Jesse Allen with you here once again. Thank you for joining us and making us part of your day today. MarketTalkAg.com, that is our home on the web. MarketTalkAg.com, that's where you can find us there and find all of our streaming sources and more. MarketTalkAg.com. Well, a interesting way to wrap up what's been a pretty hectic week here throughout the trade. As we head into the long holiday weekend, let's talk about all of it. Let's bring in our good friend John Heinberg with Total Farm Marketing. John, good afternoon to you. And, beginning of this week, it was not looking very good. And, we at least wrapped up the week here in the grain side of the trade okay, I would say, heading into this long holiday weekend. And I know we can get into specifics here in a second, but what's just your general thought here with the way we wrapped up today's trade heading into the holiday weekend?
Well, let's get into the positive side of things first before we come back and talk about the negative. What we're seeing in that corn market right now. Soybeans, we went down, challenged 12.75 this week. Seemed to be an area that wanted to, dig its heels in. We saw Chinese demand pick up last couple of days here with export sales announcements. Plus, we had that weekly export sales total at 2.13 million metric tons, which was well above expectations. And we see, we get those reported sales, and then there's the sales that are unreported. And there was a pile of those that were, not expected. So that's, at least shows us again when this bean market gets down under that $13 window, the end users want to step back in. So that builds some base in that market. Now we'll see where we want to get to with the USDA report here next week, and where the picture is going to be as we anticipate the yield number probably coming back up. And now we got talk maybe some, the USDA is going to put some new acre numbers out there for that report. So we'll have to see how that shapes up. And you got a wheat market had a great close the last couple of days. It looked like we're on the verge of breaking a technical pattern to the downside here this week, and it rejected that. And we saw some good buying move in that was being fueled by the dollar being weaker, as well as, continue to watch Russian wheat prices rise. Just hope we get to see some more of that demand here in the U.S. front in the longer term. So we have really good closes in those two markets. We'll see how that carries into the report next week. Realistically, the laggard in this whole picture is corn right now. Even compare corn to some of its counterparts. Look at the spread from corn to wheat. And when I even talked with a few people about today, even though it's a minor market, the corn versus oat market is, historically narrow. Right now, oats and corn are almost the same price. They're within 15 cents of each other. So again, corn's just struggling. And at this time frame, this market, whether it's the result of the hurricane, some of the shipping issues, we continue to watch global prices, still keep pressure on U.S. corn prices. I heard today Argentina is still the cheapest corn in the world until January. So that's just things that just make this market right now say we don't want corn, and we're seeing some carry build into this market with that same message to producers saying, hang on to your corn, hold it for later, because right now we're more concerned about getting corn and beans in versus beans and wheat in versus corn.
Well, John, let's break down corn a little bit. Let's stay on that train here. And obviously, Hurricane Ida moving through the Gulf and the damage it brought with it was really kind of the catalyst that kicked things off here this week. But even since we really haven't been able to recover. Basis levels along the river dropped in some spots $1 or so here this week, and kind of like you alluded to, it just really seems like the life has been taken out of this corn market. It's got a very bearish tone, and one has to wonder, with our close today, 524 on December corn, pushing down, can we push down any more, I guess? And one has to wonder heading into that report next Friday, will we see the board break below $5 in corn and D's corn? What are your thoughts just on this corn market a little more? And do you think there's more downside momentum here?
I think a couple of things are going to come into play there. First off, what's going to be the technical picture? We've consolidated the last 2 days, and we went down sub 520, snapped back above that area. least we've seen some rejection on the selling side at this level. But we hit 525. We can't seem to fight through that area. We got above it a little bit today and yesterday, which is realistically depressing. When you look at today, we had an 8-cent trading range in corn, and we were within yesterday's trading range. So it's still just a consolidation day. So we're kind of building a couple days of a base here. Wouldn't shock me next week if this market wants to continue to see some bearish tendencies, that we do have breakthrough. And we got the 200-day moving average out at the $5 level. So I'm a little cautious, especially with the report next week. We're starting to get some of these analyst expectations out there. So far, everybody is raising the yield up. Now, like I said earlier, we got talk that maybe we'll see some more acres come into play. That's going to make the supply side a little bit heavier. And then we got to see what the USDA does with the demand. We ended the marketing year, so that came across here this week on the end of August. So we got some rollover on some of those supplies. So right now, this market just tells us that maybe we're comfortable, at least in this window on the corn side. Seeing that maybe too, even with the way the September contract, I know it's in delivery, but it was down 8 cents today. That's just this market basically saying we don't want the product here, and they're going to push it off to deferred contracts. And as we put 17 cents a carry in September, December, just in the last day or so. So that's going to be something that we'll have to watch next week. What's going to be that tone coming out of there? Now, we get some news over the weekend, the ports open back up, we start getting some product moving again, get some electricity moving in that area. That seems to be the biggest concern over the physical damage. Maybe this market finds some stability here. Again, still like I mentioned just a bit ago, you look at those spreads of corn to wheat, corn to oats, and other grains that are competing. Corn really is the laggard here, and there's going to, might be a window where all of a sudden these spreads just start unwinding, and corn is the one that benefits from it. So we'll have to just kind of watch on the technical side and how this market trades.
Before we move to wheat and soybeans, are you surprised that USDA is going to be bringing up some acreage numbers here in the September report? We don't typically do that, and the fact that they're saying they pretty much have all the data they need to make those adjustments, is that something that surprises you, and or is it a concern at all, John?
Yes, on both fronts. First off, not to poke at the USDA, but typically, when do they get numbers put together early? You think about the last handful of years here in terms of, we got revisions, and here we got numbers ready to go that weren't supposed to come out till October. So that makes me a little cautious that something's coming, that they realize maybe they are off on the number, probably going to be adding some acres in. At least that's the anticipation of the market. The market did not like that little, that news release by them saying they were going to do this. So we'll have to see. Now, the key, though, we can add more acres in, but how much of that is going to get harvested? That's still going to be the biggest focus that we'll have to watch on the report on the 10th. What's going to be the harvested number? There's a lot of corn that's going to go into silage this year just because the quality is not there in those northern plains. Just seeing some reports of early silage shop in some of that region. The tonnage is not there, so that means we're going to take additional fields to make that supply of feed they need. So we'll have to see how that comes out. They may be able to throw some extra acres in, but it may not be reflected on the harvested acre side. So but it does make me nervous. It just gives perception again to this market, and that seems to be what's going on here, that hey, the corn pile is getting bigger and a little bit more comfortable, whether it's the yield coming up or now we're adding additional acres, or like we said, the concern regarding demand.
John, let's look at wheat here, and we alluded to this a little bit. Great close to wrap the week here. Spring wheat. I know that September contract's very thinly traded, but we know the spring wheat crop issues there. That was the leader out of the wheats today. But even December Minneapolis wheat was up. KC wheat looked strong, and I'm hearing some drought concerns in Kansas here. And you mentioned some of the production issues as well worldwide. We have issues in Russia, the Ukraine, Bulgaria, etc. So what do you make of this wheat market? And I know you're pretty friendly with this market here after the close today.
Yeah, I just like the way the price action happened over the last couple of days. There's a lot of talk about what's going to be going on in the acre front. We're getting that window where that winter wheat crop's going to start thinking about planting pretty dang soon here. So, we're going to be looking at getting some acres bought there. Again, another reason why maybe corn is going to come along, just getting drugged with it if we start seeing some lift, because we need acres in all the grains at this time frame. So again, we saw a pretty good rejection of a possible breakout to the downside this week. Nice strong close. We're looking at some more upside potential again. You got a global issue that's still relatively tight. You got talk in China that producers are not selling, so there's going to be things that need to be done in terms of maybe pulling some more wheat across the globe. Maybe global wheat prices just need to keep climbing here. So I'm watching that very closely. And then obviously what's going to be going on, that's pretty early to start talking about weather in terms of Kansas and the winter wheat belt, but it's also still something that's going to be out there, especially with the whispers of La Nina and what we've seen in the past with that, possibly coming back in. Then we got that spring wheat crop. We sat around $9 here for the longest time, been consolidating, and realistically, given the supply from what Stats Canada put out this week, as well as what we are in the United States, that feels like that market's got one more good run in it here to secure supplies. Actually saw one of the users this week in terms of one of the pasta companies talking about wheat prices and trying to lock in supplies and how difficult it was. Just again tells you what's going on in that market on the bigger side.
It'll be interesting to see if that one good run left does happen. Do we get $10 spring wheat? And I'm curious. I don't know if we have enough to get there, John, but I think it could be, it's possible. It could happen.
As thinly traded as that market is, if it gets some momentum behind it, people start pouring in very quickly. Yeah, we can be there in a matter of days, just given the strength of that market. Then again, that's in the historical highs. We'll have to see how it handles that. But we'll see what some of those numbers will be like again in the USDA report, as well as Stats Canada is going to update some more numbers down the road. That was just the first level of adjustments. So the crop is not there. I haven't heard anything to change that in my mind yet. And then we're still looking at global exporters, being tight on the wheat supplies, as well as getting a friendly break in this U.S. dollar, which makes us a little bit more available on the global supply. So I kind of like what wheat might have going for it. And we've seen it before where wheat can wind up being a leader in this grain market.
On the soybean side, we touched on it as well. The China demand that's there, good weekly export sales and number, those sales that were under 100,000 metric tons that aren't reported until we get the weekly exports in. So some good moves for beans on the export front here this week. A decent close today. I know bean oil fell off a little bit near the close of the session, but overall a fairly strong soybean market. Now we talk about the possible addition of acres, though, John, moving into next week, and we have to wonder, we're going to see mostly corn acres added. Are we going to see some bean acres? How much has this rain recently helped with pod fill, etc.? What's your thoughts on the soybean market heading into Labor Day?
Yeah, again, a lot of variables that we're watching at this time frame. And, it does sound like some of the moisture did come in and did help out a little bit in terms of some of these later crops and later filling pods. We'll see. Still have a lot of producers that continue to talk to me about, yeah, we got a lot of pods out there, but they're 2 bean pods. They're not 4, they're not 3, or we got some flat beans in them. So there's a lot of concerns regarding what the quality of this crop is going to be in terms of the supply side of it down the road. We're still tight until the USDA makes some major adjustments on the demand side of the equation and adds, bushels into that carryout situation. The bean market's kind of getting forgot about here again. Now, again, we're thinking of a market that, 8 months from now, we're going to have a huge South American supply come at us. Maybe we can get ourselves through. We'll see. But at the same time frame, we're talking to producers, or we're going to be watching and see what this market is trying to tell us. Right now, we don't have a lot of carry in that market, so this market wants those beans. $13 basically covers you all the way out till March. So again, it's going to be very similar to last year. We need to get these beans up front and get them moving here, and this market's probably going to pay for it. Biggest concern is how long is the Gulf going to take for shipping issues? Otherwise, we're going to have to get some things put together, go out through the PNW. Problem there is not a lot of beans in South and North Dakota to move over there. So we're going to have to source those beans from other locations to get to those other ports so we can meet that key demand that we need to see, over the next handful of months as we move into harvest, because bean shipping season is September to January, and then that turns to the corn side of the equation.
Yeah, I'm going to be very interested to see what happens with this crop and some of those shipping challenges possibly as well. You mentioned South America, and that's another thing I think we need to keep in the back of our minds as well is, they've still had some continued weather issues down there, and we're getting ready for planting and wondering about, are they going to continue to have weather issues, or will they be able to raise a big crop? And I know there's a lot of variables there, but I think that's something that maybe the market is keeping in the back of its mind as well here as we move into the fall, John.
Yeah, we need to kind of keep it there at this stage, right now. But obviously, we have a market that reacts to media headlines extremely quick and extremely aggressively. But you go look at the historical planting pace for South American beans. Typically, about the 10th of October, that's when we really want to start seeing, hey, where are they at on the planting pace? About 10% of their beans will be in the ground between now and that first part of October. Then the bulk of it gets put together between then and the first couple of weeks of November. So that's going to be the key window in terms of watching where this planting pace goes. So even if they're a little slow to start out, I know the media is going to jump on it, and we'll hear the headlines, we'll see it on social media. But at the same time, realistically, it's at a stage where it doesn't matter until we get into that mid-October window. Now, there, if we're starting to see things fall back, then we'll have the same issues we saw last year, which really opened up the door for U.S. bean exports, which was a crop that was running a month late. China was in need of beans, and they still are in need of beans. Everything I keep reading and hearing, they still need supply secured for October, November windows, and that's why they've been continuing to buy U.S. beans. Now, again, if that South American crop gets moved back into a later harvest because of that weather, that could be another issue we see fire up as we get into December and January, when we saw those bean prices really take off here last year.
John, we need to touch on livestock before we run out of time. And I don't know if you're a prophet or not. We were talking about this off air, but you talked about some of this downside pressure in cattle and maybe another break here, and we're seeing that. Talk to me about what you've seen with this price action here the last couple of days in cattle as we head to the holiday weekend.
Yeah, this cattle market can really move technically, and that's a little bit of what's going on here. First off, fundamentals softened. Now, historically, things are still extremely strong on the retail front. We popped almost $350 on the choice carcass. Now we're down just under 340 with some pullback due to seasonality. The retailers kind of got through that Labor Day window, so it was easier for them to back off buying that beef right at that time frame. So that's a factor that's coming into play. That cash market just continues to chop along. We saw some early bids that were pretty good this week, at least maybe picking up another dollar, and then they softened as the week went on. So that added more selling pressure. So it kind of feels like a lot of producers maybe getting some hedging in here, locking in the cash, and then they're riding the downside of the market to pick up a few extra dollars. So we'll have to see how that plays out. Now, the last thing that's still out there and is a concern is also what's going on with COVID, the Delta variant, and we got the flooding on the East Coast this week as well. Those are all things that kind of weigh on that demand picture here. Is the restaurant trade snapping back like we thought it would? In fact, the jobs number today saw a reduction in employment in the restaurant sector. So that just maybe tells us things aren't as good as we think they are out there. And that was a big key source for beef demand as well. So now with that, we had a technical picture that looks shaky for both lives and feeders. Difficult closes today with downward momentum. It's a market that can trade extremely aggressively on the technical front. And then we see margin trade kicking in as people are on the wrong side and need to cover. So they're selling to get out of positions, and it can just turn into a bit of a waterfall type process. So I'm very cautious cattle. Today we saw December at least hold the 100-day moving average. October continues to break lower. Wouldn't shock me that we see some follow through, especially with the holiday shortened week next week. Got a little bit more of a downside target here. Then I think we're going to still see some good value, though, longer term. But this has been a rally that's been going on in these front 2 months, basically since last October, without a major correction. So it might be just due that we see that technical sell-off and long liquidation here.
Well, like I said, I don't know if you're a prophet or not. I don't know how many weeks ago it was, but you called this break. We were talking about that, John, and I don't remember exactly what show it was, but you were spot on with this one, sir. So you get a point on the board for sure. Hogs, we didn't touch on those real briefly. Any thoughts on this hog market? It looked like it just kind of traded choppy here today, heading into the holiday weekend.
Yeah, you got a couple different battles there. You got a cash market that's not extremely friendly right now. It's just been sliding on a seasonal basis. But then you still got a futures market that's well underneath that cash market. So that kind of keeps this market supported. Retail values have been choppy, but still holding around that 105 to 110 area. We'll continue to see how that plays out. So add it all together, sideways trade. It seems to be tagged between 90 and 85 on that October contract as we're kind of building here. Now we'll see. It's a little bit of a wedge pattern, which is probably going to break out one way or another. So we'll have to watch that going forward into the fall. typically we'll see, maybe we can see a little bit more strength. But I think right now we're just in a window here where this market's just going to stay very, very choppy until we kind of maybe get things in line between that cash market and that futures market overall.
John, any other final thoughts you have for us as we wrap up today and head into the Labor Day weekend?
We got a jobs number today that was a really big disappointment. So we talk about those outside markets. What's that going to do in terms of the Fed's ideas, in terms of the money flow? That was a number that was probably, very bearish for the dollar in terms of we're going to need to maybe keep stimulus or keep the buying programs from the Fed working. So we're seeing the dollar react. If we continue to see that break, that's going to keep things inflationary. And we'll have to watch how that comes into play here too. So, a lot of little factors that are just bigger than what we're dealing with right now that we need to keep an eye on in terms of just the U.S. economy and how it's going to react to what the money flow is going to be and the pace of the U.S. dollar going forward.
Well, John, if producers need some help and advice, I know they can reach out to you and the team there at Total Farm Marketing online, give a phone call, a lot of different ways to reach you guys, isn't there?
Sure. Just give me a call, 800-334-9779, or shoot me an email at johnh@totalfarmmarketing.com. And again, don't forget about that website, totalfarmmarketing.com. A lot of great information that's out there for producers to access.
Well, John, go fire up a steak or a pork chop or something and have a great weekend, sir. Thanks so much for the time. We'll talk to you on what's going to be a short and busy week next week. Thanks so much.
Sounds great. Have a good weekend, everybody.
That's John Heinberg with Total Farm Marketing, our guest today here on Market Talk to spend the Friday, September 3rd edition of Market Talk. I'm Jesse Allen, wishing you and yours a great holiday weekend.